Hello, and welcome to Credibly Challenged, a podcast about bank risk management. My name is Matt Bisanz, and I'm a partner in Mayer Brown's bank regulatory practice. Joining me today is Til Schuermann. He is a partner at Oliver Wyman, the consulting firm, and he is, among other things, the co-head of their finance, risk, and public policy practice. Til has an interesting background that we're going to talk more about today, having worked at the Federal Reserve, having worked on many international projects, and also, unlike many of the other people who have been on our program, he actually has a background in economics with his PhD in economics. So he's a really smart guy. But today, I think we're going to talk about some of the things that he has seen in his career and what kind of wisdom he has for our audience. Again, focusing on bank risk management and how it has become a huge topic and continues to be a huge topic for many of the listeners to this podcast. Til, thanks for joining us.
Thank you for inviting me. This is going to be fun.
So let's jump in on something that I find fascinating, just because I'm a long-time student of many fields. But you started out with a PhD in economics, pretty Ivy Tower degree. How did you get involved in the day-to-day operational aspects of managing risks and stress testing?
Well, I tell you, this wasn't the plan. From the moment that I started graduate school. I started graduate school with the intent of becoming an academic. My dissertation actually had what turned out later, I didn't even know at the time, quite a lot of use, some use in risk management, as I'll expand in a second. My first step out of grad school actually was at Bell Labs, where I got started in this. I sort of fell into it by looking at fraud detection on the phone network back then. And that got me essentially down the road of risk management. My dissertation, among other things, I did econometrics, touched on models that looked at limited dependent variables and such as binary ones. So default, not default, pay, don't pay, core to risk management issues.
So when you say you looked at phone system fraud, the only thing I can remember is that scene in the movie, I think, where Steve Wozniak has the little whistle that he's using to try to trip the long distance signal back in the early 80s. Is that the kind of stuff you were looking at?
That's what we were trying to catch, exactly. One of the things that sensitized me to is you chase you want to chase the big fish. So if the phone, bill at the time, the long distance bill was, I don't know, say 50, this is a long time ago, so $50 a month, you don't go after those, you go after those that rack up thousands of dollars a month. Mm-hmm. Of course, the problem is those are also, when they're legit, the best customers. Mm-hmm. So it introduced an interesting economic problem, a business problem of how do you trade off, in the false positives. In other words, you think they're bad guys, but they're not. From the false negatives, you think they're good guys, but they turn out to be bad guys. And that made an interesting technical problem into an interesting business problem.
Interesting. Well, then that's interesting to hear. So after that, after a few other stops, like you said, you went to the government before. Now you've come back to Oliver Wyman. How was that practice from going from government life to back to being a consultant again, billing by the day or by the hour? What was that like for you?
Well, so my time at the New York Fed was remarkable and amazing. To be involved, early on just in supporting policy. I was a research economist there, and then when the crisis hit, to be, sucked into crisis firefighting and have a front row seat. A lot of the, my internal client, if you will, was bank supervision. It was not working on monetary policy because my research at the time had really gravitated over very much to risk management, and particularly risk management in banking. Mm-hmm. And so there's nothing like a financial crisis to focus the mind on risk management, as we're learning again in the last few months. I was involved quite heavily in the 2009 bank stress test, which then got me down the road of stress testing. It wasn't the first time I had encountered stress testing, but it certainly got me down the road very solidly. A lot of work at the Fed actually it has a kind of project feel. You work on a problem for a few months, and then you move on to the next problem. The SCAP, of course, was a very large project that went on for a few months, and it spawned all kinds of things. But in that sense, the transition from a kind of work style perspective was not as different as I thought it might have been. And of course, the timing was very good. I left the Fed in 2011 because not only was that sort of the beginning of the wave in the United States of what became the CCAR program, but also the dawn essentially of it had dawned before, of the sovereign crisis in Europe that required a whole bunch of stress tests at the system level. So our firm did Spain in 2012, for example. I spent a long hot summer in Madrid in 2012, which was really super interesting. And then in 2014, we supported the European Central Bank in their first ever comprehensive assessment and stress test that the ECB ran, as opposed to some of the previous ones that didn't go so well, run by other entities in Europe. So for many, many years, it was sort of all stress testing all the time until things simmered down in Europe, and then also in the US when the CCAR program became really quite mature in the late 2010s.
So one trend that I've seen on the legal side with CCAR and similar stress testing, I don't know if you've seen it on the design and technical side. It seems that there's more and more focus in the banks on documenting how they're operating the program, documenting on how they're challenging results. That I'm seeing more and more involvement from second and third line of defense, more things around documentation of, well, how did you execute it, who's reviewed it, who's signed off on these exceptions or assumptions, and almost, and this is probably just from my simplistic legal perspective, the underlying stress test becomes secondary to the process that is around it, and banks talk about standing up their annual process. What have you been seeing in that balance between executing versus documenting or managing?
So the trend that you described is completely consistent with what I saw and what I've seen. That theme actually even comes out in the just issued Barr report on SVB and the supervisory kind of background around it. This emphasis on, and in hindsight, perhaps overemphasis on process, governance, documentation. So there's a glass half full and a glass half empty view of this. We've been focused on half empty, and I'll come a little bit more to that. We'll dig into that a bit more because you raise a really important point, I think, and we're drawing lessons from it now. So the glass half full view is the initial CCAR program was a lot about, well, the very initial program was just, do the banks continue? Do they really have enough capital? Because we had a bunch of quantitative failures early. Once that's done, and took a couple of years, the focus really shifted to like beefing up risk management and control, genuinely, right? And then it became a bit more routinized. So risk management and control are processes, right? They are, and they require a lot of what goes wrong in risk management are actually issues in governance, poor decision making, poor information that comes into the process of decision making. So it's not surprising that the focus shifted to that. The supervisory focus shifted to the internal process management. And, there is a view in the supervisory community, understandable, that if it's not written down, it doesn't exist. So please write it down. And it sort of took on a life of its own. It really became the dominant momentum, unfortunately. Also because there was a nice long period of quiet. That has changed. It changed actually quite radically with the pandemic. And the focus shifted already both at banks and at the supervisory community with the pandemic, and it's ratcheted up another notch just in the last, I'd say, in the last year plus. So really starting with the Russia invasion of Ukraine that generated a lot of shocks across the system. Importantly, it also came actually in the middle of the 2022, stress testing cycle. So, and then now the current bank turmoil is once again in the middle of a cycle, although just for the largest banks. So a constant reminder that there are real risks out there that should be managed, rather than just the processes that should be buttoned up for the programs that you've got underway.
The one tension, I guess, to that is that there are some kinds of infrequent stress events, and I don't know if the current ones that we're experiencing or some of the ones you listed are necessarily in the infrequent category, but certainly this is something I see in a day-to-day practice is there's my routine type work that I do, and then there's the odd question that someone raises or the specialized question, and it might be really interesting, but I'm not going to see it again for 5 years. And do you think there is a skill set that is better, or things that you've seen in your experience where some people thrive better on that day-to-day routine, and other people are maybe the better firefighter, running in to tackle the immediate problem?
That's an excellent question, Matt. That is a really very good question. So I'm not sure that so the short answer is I think yes, there are, if your role is to worry more about relatively high frequency BAU type risk management and the moderate stresses, let's say that you explore also to define risk limits and to probe risk limits, right? Most risk limit architectures have multiple tripwires.
Right.
And so this kind of more BAU, business as usual type probing and stress testing, if you will, is more sort of on the first tripwires, rather than the break the glass tripwire. The break the glass tripwire, the more more comprehensive rare event type stresses. It's just easier, I have found over the years, for individuals that are not super in the weeds, to be able to step back and focus their mind and attention to risks that are might come out of left field, that are worth paying attention to. There's a gazillion things that might come out of left field. What's hard, and I think this is partly what you're probing, is to select the ones that I should pay attention to. We keep getting surprised by that. So I think one of the lessons for me anyway, particularly of the last 3 years, is that aperture has to be widened continuously. It sucks, but that's life. It also opens increasingly for me the imperative to have stress test risk management groups, but particularly stress scenario design committees, let's call them for lack of a better term, to be really interdisciplinary. So for example, geopolitical risk was something that few banks had genuine country and political risks departments. Used to be much more common. I think with the invasion of Ukraine, that has really shifted. We're noticing a lot more attention paid to, and formal attention paid to, geopolitical risk. It's helpful to have political scientists and international relations people at the table that think about this rather than econometricians. So this notion of having a broader team, different disciplines, is, I think, for those inner tripwires that break the glass kinds of risk scenarios, I think is pretty critical. I don't, you asked the kind of, I don't think it has anything to do with skills or talents or anything like that. I think it's just very difficult inherently to be able to step back and widen the aperture if your job is to, worry about the outer tripwire.
That makes sense. And I'm glad you brought up interdisciplinary teams, because that was something that I think a lot of listeners, because we have a crossover between risk management and lawyers, and certainly over the last few years, I've been working more and more with people in risk management. Again, economists like you, technical design people, modelers, even coders on things. And it's interesting to see how everyone approaches from their background. And I'll just say lawyers are not the most flexible people. We don't necessarily do well with uncertainty. The stereotype of Law and Order with Sam Waterston up there for the last 35 years, like that hasn't changed in 35 years of how Law and Order is presented. Meanwhile, your profession has just undergone revolution after revolution. So how is your relationship when you've had to work with lawyers, either in-house or external, on stress testing type things? How has that been for you?
So I have to tell you that I gained a huge amount of respect for lawyers during the financial crisis. So until that point, I'd had almost no interaction professionally with members, with members from legal, either in the private sector or at the Fed. That changed radically with the financial crisis, when we had to, there were questions about what it was and wasn't allowed to be done under the Federal Reserve Act, but also lots of other knock-on questions that at the time I wasn't sensitive to, but in working with legal became quite clear. What I appreciated especially was the rigor of thinking. So the lawyers that I worked with had, your profession teaches individuals to think very logically and very organized and very critically through issues. So I really appreciated that. There's a kind of a discipline and a structure that they brought to the table that I think was quite complementary actually to the more, partly, theoretical work, the theoretical thinking that economists brought in, and the risk managers are a lot more comfortable. They have to be more comfortable with ambiguity and uncertainty. That's the business. And that I thought was super complementary to the skills that the lawyers brought to the table, who, yes, they have a narrower aperture, but they have a discipline of thinking that I think was hugely valuable.
Good. I'm glad to hear that. That's you may be the first positive speaker on lawyers that I've heard from in a long time. So that's great to hear. One other thing I really wanted to make sure we covered was your involvement with developing the professional community. That I think you're involved with the Social Science Research Council, and Oliver Wyman is really involved, I know, with ORX, which is a loss event sharing organization that I think is used by most of the major banks in the world to develop their knowledge on operational risk. One big audience we have for this podcast is younger professionals who are looking to see how they can grow. In the legal community, we have lots of opportunities for leadership. We have local bar associations, we have national bar associations, we have court systems, lots of things. But for risk management, when you're trying to do thought leadership as a younger professional, it can be more difficult. And so, maybe a little from your experience with those types of organizations.
Thank you. Yeah, no, this is a topic I feel sort of quite near and dear to my heart. It is so the place where I'm probably sort of most directly involved in this is through the Global Association of Risk Professionals, GARP. So GARP has, I remember very clearly when it was started well over 20 years ago. And I remember at the time thinking, what, this sort of thing doesn't exist already? It really has to exist. So I was glad that it was formed, and it's been quite successful. I think partly because, one, it's a nonprofit, so it, in that sense, is kind of deliberately education oriented. It's not a profit making entity. It is centered around an exam, the Financial Risk Manager exam, sort of inspired by the CFA. And I'm on the exam committee, so it is sort of the channel where I feel most where I think I could be most effective is to influence the curriculum in some sense, like what should young risk managers focus on in terms of training and getting ready for the profession. So I think obviously I put my time. I donate my time to this. I care about it. I think that's it's important for senior, more crusty members in the profession like me to give back to the community in that way. For Oliver Wyman, since we have such a strong kind of presence and reputation in risk management and supporting risk management at financial institutions, but also public sector and non-financial institutions increasingly. Being involved in essentially things that serve the public and the profession more broadly is again a way to give back, but also it's frankly in our interest. We want risk management to become more prominent in companies, and this goes beyond just financial institutions. We think it is just inherently good practice to have a senior member in an organization dedicated and a group dedicated just to worrying about stuff that can go wrong. Everyone else in a for-profit enterprise is understandably oriented towards profit making. There are control functions, of course. Two very important ones are legal and audit. But this comes back to a point you made earlier. To have someone on a group comfortable with ambiguity and risks, worrying specifically about those risks that might come around the corner, and setting in place governance inside so that there's always a balance between this is not about not taking risks. It's about taking risks with your eyes wide open.
Mm-hmm. So like Oliver Wyman, Mayer Brown's also, though, a profit-making venture. And one of the challenges we run into, because we have a similar client-centric approach that you do of trying to help the client and the community, is when we are asked to on selling our expertise versus building a solution, that it's really easy for me to get a proposal, prospectus, a private placement memorandum, and say, yes, this is fine, or here's the language you need to put in to make it fine. And so there I'm selling my expertise, that I'm answering a question. Can you offer this product? Is this compliant, etc.? But then the flip side of that is helping clients develop tailored solutions or in-house knowledge. And it would be great if the same client called me back with the same question every day for 20 years and I got to bill for it. That would be a great career for me. But maybe that wouldn't be in their interest, because at some point you would think they would learn how to answer that question and they would bring me new questions. So how do you manage that tension of, you've got 20, 30 years of experience that you could just sell expertise every day versus teaching clients how to solve their own problems? How do you manage that?
So one, I imagine you also would get bored if we sell the same thing year in, year out. So,
true.
So I remember very clearly working with a large regional bank early in the stress testing days, and I think we started working with them in 2014, 2013, something to that general effect, to help them set up their program. And I remember that by after the 2015 cycle, they had it down, and they said, "Great. Thank you. We don't need you anymore. You're on your own." And, I view that, and I really mean this, I view that as a real success. Frankly, we were so busy that it was like there was no shortage of work. So that's not a problem. It has been a problem. But and in that way, that I viewed very much as a success, is like the whole I view like what we as advisors should do and try to do, and I venture to say are successful the vast majority of time in doing is we come here to solve a problem. Sometimes the aperture widens. You work closely with a client so that they, a lot of it is learning by doing. Then I have another program that I just, we work with a bank very intensely for 2 years. This year is a much more scaled back, and we're just in the kind of quality assurance part of the project. You're on your own, go do it. We're going to take a look at stuff, not even everything along the way. And if we see a problem, we'll of course raise our hand and help you fix it. But this year, you're largely on your own, and that's very much by design. That is how it should be done. And in order to add value, I think particularly at the sort of more more strategic end of the consulting spectrum, you have to stay at the forefront. It's you have to. It's not. It's. I mean, arguably, we're too expensive to do routine work. The bank should do their own. They should do it themselves. And our job is to help them get to that point.
Good perspective. I like that approach. And you're right. There is a challenge to doing new things. And if we went back to young or little Til and back before the financial crisis and told him that he would be learning all of these stress testing things and designing these programs, he would probably be awed at what his next 15 years was going to be like. Thinking about some of the people today who maybe are in those shoes that you once were in, and where operational risk management techniques will evolve, where there may be areas of focus that, like, we already have stress testing, we already have CCAR. It's yes, there's modifications to the scenario design, scenario analysis, to the governance frameworks, but what are some areas where you see it evolving, where people entering the profession might have that same wild ride that you had?
It helps to have a big financial crisis for a wild ride. I don't wish that on the world, because they cause a lot of damage. And even now, this very, in the grand scheme of things, more moderate one that we're going through causes damage and causes a lot of hardship. Our jobs at risk managers is to do our best to prevent that from happening. So let me actually start from the familiar platform, which is the stress testing. Stress testing is just a tool. Frankly, it's not even a new tool. It's one of the oldest tools in risk management. It just took on a new form in 2009 and has morphed a bit since. It's expanding and taking on yet new forms, with the last 3 years. Most of the action has been, but not all, in more and more non-financial risks. Pandemic was always in the list, in the risk inventory of banks. It wasn't very far at the top. Pandemic was near the top of life insurance companies' risk register. Nobody thought it was going to unfold in this way, and in particular, the intersection of political risk and seemingly irrational human behavior, and the intersection of that with the unfolding of the pandemic was not in the models, was not in the thinking, and certainly not sufficiently. So perhaps my plea again to different disciplines: you don't need to be an economist, you don't need to be a lawyer, you don't need to be a finance person in order to contribute a lot to risk management. Anthropologists, political scientists, and philosophy majors, you have a lot to contribute because you think about the world in a slightly different way that is going to be complementary. So being really having your eyes very wide open about risk possibilities, thinking carefully about how about channels of contagion that are not immediately apparent. So, the wake up for all of us about the supply chain, for example. Yes, there were people who worried about supply chains, but I didn't know a lot of people in banking risk management that worried about supply chains until the supply chain broke. Now we've all become like amateur experts at what supply chains do. What's the next thing that we should be worried about? And so the way I usually approach those problems is I think less about actual events. I think more about channels of contagion, so that no matter what the shock is that is hard to forecast, I have some hope of understanding the ripple effect, the magnitude, and the more pervasive damage that a particular shock can cause.
Well, Til, thank you for that. And I think with that, we'll probably close out the program. It's been really awesome talking to you today, getting that perspective on the need for interdisciplinary collaboration in risk management, and also how the risks may change, but some of the techniques of understanding and problem solving for those risks, those will remain with us for many years. So I really appreciate you sharing your time with us today. I also want to thank our audience. Without you, we wouldn't have a reason to do these programs. And so please do tune in for the next episode of Credibly Challenged. Have a great day.
Thank you so much, Matt. It was great to be here.